Internal Revenue Service IRS tax news. IRS Criminal Investigation CI pledges continued commitment to investigating COVID-19 fraud as CARES Act reaches 1-year anniversary. IR 2021-65, March 25, 2021, Washington. The Internal Revenue Service Criminal Investigation Division, the IRS-CI, marks the 1-year anniversary of the Coronavirus Aid, Relief, and Economic Securities, otherwise known as the CARES Act, by pledging its continued commitment to investigating COVID-19 fraud. So obviously, as we have the COVID-19 2020, then there's a lot of relief or special programs that were put into place, a lot of money going out for some of those programs, which increases people's desire for fraud, or fraudsters' desires at least to commit fraud at that point in time. So both the downtick in the economy, which puts more desperation possibly out there, and the increase in these programs, which are new and have money related to them, could increase the fraud level. And so they're looking into the fraud level more, so they're continuing in on that process to consider the fraud related to COVID-19 and COVID-19 relief. So over the last year, IRS-CI has been combating COVID-19 fraud related to the Economic Impact Payments, Paycheck Protection Program, the PPP, and Employee Retention Credit. So these are all things that were put in place to try to deal with the downturn in the economy and stabilize the economy, give support and whatnot. They're all new programs. They're all things that we haven't really seen before, and they all involve money and benefits that are going out, and therefore, again, due to the decrease in the economy, more desperation for out there, as well as the programs having money related to them, increases the possibility of fraud related to these programs. The agency has investigated more than 350 tax and money laundering cases nationwide, totaling $440 million. These investigations covered a broad range of criminal activity, including fraudulently obtaining loans, credits, and payments meant for American workers, families, and small businesses. Quote, criminals have tried funding their lavish lifestyles with money intended to provide Americans relief during one of the most difficult times in recent history, end quote, said Jim Lee, chief of IRS Criminal Investigation. Quote, we have investigated cases of criminal flaunting stolen money to buy fancy cars, boats, and pay for luxury apartments while families and businesses struggle to make ends meet. IRS-CI special agents have done an extraordinary job identifying millions in stolen money, and our work is far from over. We will not cease until every fraudulently obtained dollar is accounted for and the individuals behind the schemes are prosecuted to the fullest extent of the law, end quote. IRS-CI encourages the public to share information regarding known or suspected fraud attempts against any of the programs offered through the CARES Act. They report a suspected crime. Taxpayers may visit irs.gov. So they also have a link here for the report a suspected crime. The Coronavirus Aid, Relief, and Economic Security, otherwise known as the CARES Act, was signed into law on March 27, 2020, to provide emergency financial assistance to millions of Americans suffering the economic effects of the COVID-19 pandemic. One source of relief provided by the CARES Act was the authorization of up to $349 billion in forgivable loans to small businesses for job retention and certain other expenses through the Paycheck Protection Program. So this is a huge amount, so they call it basically a loan, but obviously if you get to forgive the loan, it's not really a loan, that's basically just money that went out. So you had to jump through some hoops and make sure that you're in compliance to get their loans, have the requirements for the loans. But if you did that, then possibly they weren't loans, possibly the loan being forgiven. Obviously, that's a lot of money out there, and there could be then potential for people to try to get a piece of that money fraudulently in some way. So there is that. In April 2020, Congress authorized over $300 billion in additional funding, and in December 2020, another $284 billion. The Paycheck Protection Program allows qualifying small businesses and certain other organizations to receive loans with a maturity of 2 to 5 years and an interest rate of 1%. Businesses must use PPP loan proceeds for payroll costs, interest on mortgages, rent, and utilities. The PPP allows the interest and principal to be forgiven if businesses spend the proceeds on these expenses within a set time period and use at least certain percent of the loan toward payroll expenses. So once again, the PPP allows the interest and the principal, so that's both the interest and the principal, to be forgiven if businesses spend the proceeds on these expenses within a set time period and use at least a certain percentage of the loan towards payroll expenses. So to learn more about the COVID-19 scams and other financial schemes, there's a link to that here, or you can visit irs.gov, the IRS website. Official IRS information about COVID-19 and economic impact payments can be found on the coronavirus tax relief page, which is updated frequently. There's also a link to that here, and there'll be a link to this in the description.